Hey guys, welcome back. Today is Friday, and as expected, we had a actually clean delivery day. We got lots of speed on the daily chart, as you can see right here. So today we were aggressively trading to the downside. And now we are getting basically more clarity within our daily range. So we had high resistance to the upside, and now we are trading aggressively lower. Let's drop to a 1 hour chart. What you can see right here is the fact that we have a huge higher time frame gap. So we closed right here, opened right here, and from there on we just traded lower. Basically also formed our high within our London session. From there on we traded lower. Then New York Open Kill Zone got swept with an IM candle. Let's drop to a 15-minute chart. There's basically more to it's more easier to see it. And then from there on we just sold off heavily. So the whole AM session was trading to the downside aggressively, and we are still trading lower. And before we drop lower, I want to show you regular trading hours. So what we have right here is a new opening range gap to the downside larger than 120 handles. Therefore, we want to see NQ reach back to the upper quadrant and then follow its continuation with the trend, and that's exactly what we can see right here. So we opened right here at 9:30, traded higher, or traded down, lower, traded higher, closed higher, and then traded back to the upper quadrant of the new opening range gap, and from there on we just sold off. So let's take a look on S&P. Actually, nothing really special on ES. So we also had a huge high time frame gap. We also formed our high within London, basically, or barely. And we also swept New York Open Kill Zone with the 9 a.m. candle. And from there, we also just sold off to the downside. So let's drop to a 1-minute chart on NQ. So today's opening was actually kind of difficult because we swept New York Open Kill Zone right on, and from there on we traded higher and basically traded to the consequent encroachment level. So because we have basically a price range, if we regard the high of the London, the high from the day basically, and we take the low of the which formed right here, so before New York Open Kill Zone, we have basically our price range, and from there on we fail to trade higher than consequent encroachment. So we only trade into the discount right here basically, or no, not really. We traded into the premium if you're regarding shorts, and from there on we sold off. So therefore we cannot really see a market maker bar model form in here. So only a retracement, and from there on we sold off heavily. I was actually I wasn't sure if I would take the short right here. It actually would have been a really good short opportunity. So right here, I was convinced that we basically are not really able to look for longs in here because we are just too bearish on the day. And also, like, with trading already back to regular trading hours new opening range gap, so the upper quadrant, we are already done for the direction of the new opening range gap, so of regular trading hours direction. And also, like, the higher time frame and especially ES wasn't looking bullish. So in that case, I expected basically you run up higher right here as a retracement, as a manipulation higher, and from there on we displaced through the candle right here, becoming a balanced price range as well, and that would have been a really good short opportunity, especially because we are still within our channel macro. And yeah, but was a bit too aggressive for me today, so I was really patient, and I'm also like already profitable on the week, so I was more patient, waiting for the like slower delivering London close macro, which is a bit more slower and also more sometimes easier to trade. And it was the trade I took today. I shorted right here after we basically scrapped AM session liquidity, and we also had a short-term run and stops because we closed on the 1-minute chart above consequent encroachment, but the 5-minute candle clearly failed to close above consequent encroachment. That's basically what we want to see if we expect lower prices. We do not want to see that the candle right here closes above consequent encroachment, because then we would be more in bullish conditions, but in that case that confirms to us that we are still bearish, and therefore trading above the high right here is a short-term run on stops. We are within our long-term close macro. The inversion farewell gap got displaced through, we closed below it, traded back to it, and from there on traded lower. So I entered right here with 2 contracts. Then we had displacement lower. I took my first partial right here. Why? Because we had a 5-minute inefficient wick, which I want you to see basically get delivered, and we reacted off the upper quadrant. So therefore that's a perfect first partial to me. And I was still looking for lower prices, and I actually was, or I even had my take profit right here at consequent encroachment. I think either of the higher time frame gap right here, or even of the consequent encroachment of the bigger higher time frame gap right here. But I'm not really sure. I have to see like in a minute in my execution video. Still, NQ was delivering really I don't know, difficult today. Something was lagging, something wasn't really how it should be, because I just got out of my position right here, but I never had my take profit there. So I don't know if that's like slippage or I don't know. But yeah, we also had on the 5-minute chart, actually before we had, yeah, which chart is this? Yeah, right here on that chart. I don't know, maybe it did not uploaded it, so or refreshed it. On right here we have a 5-minute volume imbalance, but if I look on the chart right here, we do not have it. So yeah, really interesting today. Still, I really like the delivery within our London close macro. We clearly displaced lower with the trend trading just aligned with the regular trading hours direction and the higher time frame direction as well, because we already reached the upper quadrant of the new opening range gap. So therefore, we are really in a low resistance delivery to the downside, and that's exactly what we want to take. And that is basically the trade from today. Yeah, I definitely missed out on much today, but it wasn't really my fault. So yeah, still really nice delivery, and I will see you probably next week, I guess. But next week seems like a really difficult week, because we have like high impact news at, I think, let me check. Yeah, right here we have FOMC Wednesday, and also no, that was this week. We have what was NFP non-farm employment change at Tuesday, and also Thursday we have CPI. So basically Tuesday and Thursday are like both in, so that's basically the middle of the first week, and that's the middle of the second week. So not the second week, but in the second half of the week. So therefore, trading Monday is not really the best decision, because we have high impact news the next day. Then Wednesday, or so then trading Tuesday is problematic, because we have high impact news. We can definitely look for setups formed after 9:30, 9:45. So maybe after with the 10 macro, we are able to look for some trades. Still, I expect Monday to be high resistance. Then Wednesday is also really difficult, because we have basically a no news day, and then the next day we have CPI. So I didn't really know if Wednesday is a trading day for me, probably not. And then maybe we can trade after 8:30 after CPI delivered. Tentative, I don't really know. I think it's hold or something, or delayed. And yeah, then maybe Friday will deliver clean. So because then we have like all the high impact news behind us, but Fridays are always a bit difficult. So yeah, really interesting. What I like about this week is the fact that I expected Thursday and Friday to deliver cleaner, because we had FOMC Wednesday, and therefore we are now behind, or we have basically the high impact news behind us, and we delivered yesterday and today actually quite clean. So yeah, that's basically it, and see you soon.